Yo, 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 what is going on, YouTube family? Hope everyone's been having an amazing day. And in this video, I wanted to teach you guys how to correctly identify trends and how to correctly identify when the trend has broken. Okay, so without further ado, let's begin. When we are talking about uptrends, you know that price is making higher highs and higher lows. Okay? And you also know for a downtrend, price is making lower lows and lower highs. Okay? So, when you see a situation like this, what I want you guys to do is mark out your key levels like this. You have got a high, you have got a low. You have got a low, and you have got a high. Okay? So, let's just focus on, pardon me, let's just focus on the uptrend because the inverse is true for the downtrend. Okay? So, when price makes a higher high, this is very, very important, okay, in identifying that we are still in an uptrend, but how do you know when the trend has shifted? Because you don't want to be taking buys when statistically a pattern has formed, which is now going to give credence that price is more likely to go down than it is to go up. Okay, so to avoid yourself falling into that pitfall, this is the first thing that you need to do. Okay, and what also happens in trends is that price will retrace. Okay, so when price retraces and forms something like this, a lot of you might be thinking to yourself, okay, well, we've made a high, we've made a low, price has made a higher high, and now price has made a higher low. Okay, and what I've also learned from YouTube content is that when price makes a higher low, this is now giving some kind of evidence that the trend has shifted to a downtrend. So I'm going to start taking sells. And guess what happens? You take the sell and price then shoots off to the upside. And you're there thinking, what the F am I doing wrong? Okay, so it all starts with this bit by here. Okay, so from now on, when you see this situation, okay, you are going to call this a potential lower high. Okay, so this is, oops a daisy, lower high, I mean higher low. With all this higher low, lower high stuff, it's so easy to get confused. But let's make sure we're making it consistent. Okay, so this is a potential higher low. Okay, now this becomes validated as a true higher low only when price will break past this higher high to make a new higher high. Okay, and now this is the really, really important stuff. When this potential higher low gets now validated as a true higher low, this is what I call a trend defining point. Okay, and the reason why I call it a trend defining point, because in an uptrend, it's the exact opposite is true for a downtrend. Okay, well, not opposite, the inverse is true for a downtrend. So long as price is traveling above the trend defining point, we are still in an uptrend. And guess what? If price wants to break past this level, then we can ascertain that this is from my experience and what I've tested over many years of trading, is that more often than not, price has now reversed to a downtrend, and it's more likely that price will start forming the characteristics of a downtrend and will start moving to the downside. Okay, so let's just recap on that right there. Okay, in an uptrend, price is making higher highs and higher lows. Okay, we're marking out our levels as we go along. Okay, when we make a new higher high, okay, by here, this level that we marked as first, it was the potential higher low. Okay, we mark this out when price is, oops a daisy, we mark this out when price is doing something like this, and we're anticipating that price could potentially break apart above here, or it could just do whatever it wants to do, only until price breaks past the previous higher high to make a new higher high. This potential higher low is now validated as a true higher low and is now marked as our trend defining point. Okay, and what does this mean? Okay, a trend defining point, okay, is the level in which, so long as price is traveling above this level for an uptrend, okay, the uptrend is still intact. And if price breaks below this level, the trend has shifted, okay? If we're looking at a downtrend, okay, obviously it is, let's just put below here and put a slash and say downtrend, okay? The uptrend slash downtrend is still intact. I hope that makes sense, okay? So a trend defining point is the level in which, so long as price is traveling above or below this level, is this an uptrend or a downtrend, the uptrend or downtrend is still intact. And if price breaks below this level, we should put there above this level as well. I hope you guys understand this whole below and above thing is simply relating to the if you are in an uptrend or a downtrend, okay? So if price breaks this level, then the trend has shifted, okay? So let's take this and then apply the exact same concept to a downtrend, okay? And let's keep, why is that deleting this, bro? Leave me alone, man. Like, please. Maybe I just delete this, if I delete that. Okay, cool. I don't know why it was being so weird. Okay, cool. So let's go through that example one more time, but using a downtrend, okay? So price has made a lower low, okay? This is the process that you're going to be following. Price has made a lower low. Price has retraced to make a potential lower high. Remember, the potential lower high is very, very important. Okay, if you really want to, for extra practice, you can say a potential trend defining point. Okay, let's abbreviate that to TDP. Okay. Okay, let's put there TDP, trend defining point. Okay, potential lower high. So long as price, until price breaks past this lower low, this is not a true lower high and it is not a true TDP. Okay, but as long as when price has broken past this lower low to make a new lower low, you know what happens. This becomes validated as a true lower high. Now, as long as price is traveling below this level, okay, if price wanted to come and do this, I promise you now, I'll show you with a real life example. If price wanted to do something like this, going boom, 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 and yada, yada, off to the land of the Wizard of Oz, as long as it is traveling below here, I don't flipping care if the Lord above came down and said we're in an uptrend. Okay? That was blasphemy. I'm sorry. I'm a very religious man, but you get what I'm trying to say to you. So long as price is traveling below this level, we are still in a downtrend. And all of this is a load of nonsense. It's a load of noise. Okay? So if you wanted to follow that same pattern, that same routine, okay, we have got a new lower low by here. I know it's getting a bit messy, but just work with me. We've got a new lower low. You know, this is still our TDP lower high because it hasn't been broken. Okay, if price wanted to go and do something like this, you guys know the drill. Okay, you mark this out as your potential lower high, you wait for the lower low to get broken, and now this is your TDP, and this is the process that you constantly follow. So you might have to watch this again, you might have to take some screenshots, but that is simply the rules that you're following. Okay, let's go and look at some real life examples. Where should we go? Okay, this looks kind of clean. Okay, so let's just use this as our sort of points. Okay, so we're going to use the example of a uptrend just to keep it simple. So let's just draw out these levels. Okay, so we've got a high, we've got a low. Okay, so that's by here, this is there, this low is by here. Okay, so let's put a high, and again guys, this is the process that you're going to be following, okay, if you really want to get really good results with this. Okay, so another thing to make note of, guys, is that I have found the best success when price has only made a new high or a new low if it breaks past the wicks. Okay, so if it hasn't broken past the wicks, then there is simply no high or new low. Okay, so if you look at something like this, for example, where you can see price hasn't broken past these wicks, we can keep on scanning, we can keep on scanning, and we can see that price has not broken past any of these wicks, despite the fact that price has made this kind of formation. Okay, it's kind of done something like this. It's made some highs, or it would kind of look like it's made a new high, but actually, because it hasn't broken past these wicks, okay, by here, I would class it as something like this, okay, where price just simply hasn't broken this level. Okay, so when we are drawing out our levels like this, okay, when we have drawn something like this, we are basically needing to see that price has broken past the wicks. Okay, I don't care if there was a wick that was like this, okay, and price hadn't broken past by here, this is not a higher high. Okay, based off these teachings, this is not a higher high. Simply speaking, what has happened is that price has literally just done this. Okay, and for you to get the best success out of what I'm teaching you, you're going to need to practice drawing out these levels as we did in the previous, as we did in the beginning of the video. But anyways, let's carry on going, okay? So price breaks above the wick, okay? What do we have? Okay, we have a new higher high that's been forming, okay? Let's just put higher high just to kind of start it off there, okay? Nice and simple, okay? We've got a higher high, okay? Price now retraces, okay? Brilliant, it's exactly what we want to see. Price retraces, okay? And guess what? Following from that same stuff that we did earlier, this is now our potential higher low. Okay, because in the live market, if we want to just do something like this, okay, in the live market, you are not going to have all that data. So all you are going to see is something like this. So you have got a potential higher low, right? Okay, now you are going to draw out your levels to the wicks. Okay, here we go, draw it out to the wicks, and you are simply waiting for the break above. Okay, it's a bit faint, but we got the break above, and that's valid. So that is the break above. This becomes the true higher low. Okay, this is our trend defining point, which means that so long as price is traveling above this level, we are still in an uptrend. Okay, copy and paste this. This is our new higher high. Okay, so we simply just keep on going. Okay, cool. So price pushed up, okay, it made a small retracement and did the exact same thing, followed the exact same patterns, okay. This is our new higher high, okay, and this is our true higher low. It's a bit hard to see by there, okay. So what is happening now? Okay, so price, what did it do? This is where it gets really, really interesting. Okay, so price formed this high. Okay, it now pulled back by here. So what do we do, guys? Okay, the same process. Okay, this is our potential higher low. And now I know I sound like a broken record repeating myself, but it's so important. It's so important to gain this practice the way I'm teaching you guys, okay? And we are now marking this level. We are going to basically see if price wants to break above. Okay, remember, it's all about the wicks, okay? Extend your zone to make sure that the zone is accurate. And again, there is no break, okay? And boom, what is happening? Okay, so what has happened on a little diagram by here is that price has simply failed to break. So this is why it's so important to write this down as a potential higher low, because we didn't get the break above. So this is still the potential higher low. Now, where was our true higher low? Okay, our true higher low from our diagram was by here. Okay, so this is our trend defining point, right? Meaning that so long as price travels above here, we are still in an uptrend. Okay, so that's this level right by there. Because remember, this only gets validated if we made a new higher high. But because there was no break above the wicks, there is no new higher high. So therefore, this is our TDP. Let's put TDP, trend defining point. You guys remember what it is? It was in the beginning of the video. Okay, so as you can see, let's have a look and see if I'm going to look really stupid now if this came and just disrespected everything that I was teaching. Come on, come on, come on, come on, come on, come on, come on. And well, there you have it. That is simply it. That is what I am teaching you guys. Okay, so long as price is traveling above this, and I bet you any money it's going to start rising and carry on going. Well, there we go, and you start the whole process again. Okay, so two questions might be popping up in your head. Well, if I see something like this, does this mean that I can't take trades to the downside? Of course it is. Of course you could if you really wanted to. If that's in your trading plan. I particularly don't think it's clear enough for me to want to trade. I'd rather wait for this buy here, but it's completely up to you. If you wanted to take trades to this level, then by all means go ahead and do it. And I guess the second question to you is it perfectly possible for price to follow this whole pattern? You make a new higher high. This is your TDP, okay? And if price, comes back down by here, okay, we want to take sells and price wants to go and do this. Is that possible? Absolutely, it's possible. But what I've tested and found over the years of trading is that more often than not, so long as price follows these rules, what I've taught you, it's going to respect it. Okay, it doesn't mean when it doesn't happen, you would completely abandon the concept and you completely abandon the strategy. It just means that you need to move on. It was a loss and you've got a strategy and a process that works. Okay, so just as a recap, you completely follow this model. The complete opposite is true for downtrends. And so long as you are keeping track of your levels, you're keeping track of the new higher highs, the potential higher lows, the new lower lows, the potential lower highs, and basically waiting for the validation of the potential lower highs and the potential higher lows to validate themselves as true higher lows and true lower highs, thus validating them as true TDPs, thus validating these levels as the levels in which price is still in its respective trend so long as it respects the TDP. That was a whole concoction of a bunch of madness and words that's quite frankly sometimes difficult to articulate in this trading business because there's so many levels to define and talk about. But guys, that is me done for this particular video. I hope you guys found it informative and it was enjoyable to watch. So don't just take my word for it, guys. Go and backtest this yourself. And this whole concept works on 5-minute, 15-minute, 1 hour, 4 hour, daily, everything. But backtest it yourself. See if this really is something that actually works for yourself. And if it is, see how you can incorporate it into your trading. And I really do hope that it improves your trading and improves your results. But without further ado, guys, please comment, like, and subscribe if you enjoyed the video. I got so much more content that I'm going to be pushing out. I'm going to log off for now. On to the next one. Happy trading. Take care.